traders think they have to trade every day. I completely disagree. We've already had a weak non-farm payroll, we've had a weak PPI, we've had a weak CPI, yet the dollar still hasn't moved sharply to the downside. So the question isn't what I'm buying today. The question is why I'm still choosing to wait. In today's weekly Forex forecast, I'm not giving you random trade signals. Instead, I'm going to explain exactly why I'm holding my current positions on pound dollar, US dollar, Canadian dollar, euro dollar, and gold. If you are enjoying combining microeconomics with technical analysis, subscribe to this channel because that's exactly what we are doing each and every week. Now let's look at the bigger picture. Let's start with the macro picture. Three of the biggest US reports have already been released. Non-farm payroll showed us that the labor market is slowing. CPI showed us inflation is cooling. PPI confirmed lower producer inflation. Normally, the combination puts pressure on the US dollar, but the markets don't always move immediately. Sometimes institutions spend days taking profit, and reducing risk exposure and repositioning before the next expansion begins. And this is exactly where I think we are right now. Now, traders, let's go and start with the pair that we usually start with, which is the euro and the dollar. Now, traders, with the euro and the dollar, very simply put, what we did last week, we did have a strong momentum to the upside with this entry right here. Came back with a pullback. This was the CPI signal. This was the PPI signal, but already we were already in, so we do not want to waste time trying to find signals when moves have already been secured. So we were already in profit, and this came out as a bullish momentum again with the PPI because the PPI has already confirmed the cooling pressure on the producer side. So without wasting much of your time, traders, what do I see happening going into next week? I do see this going to the upside. This is the liquidity zone that I want to see being tested again. It can come back again to retest before the bulls take control to the upside to break this high and continually trade to the higher side. Now, euro dollar is telling exactly the same story. The macro fundamentals remain supportive. However, the market is consolidating, as you can see if we zoom out a lot. The market is still consolidating instead of exploding higher. That doesn't invalidate the bullish idea. It simply means buyers and sellers are still balancing positions. Now, if we could just flip over to see the pound and the dollar. And with the pound and the dollar, it's somehow similar to the euro and the dollar. As we know, they do have great correlation, but without wasting much of the time, last week we did not open any trade on the pound and the dollar. Why? Because on the 8th of July, we were already positioned on the buy, which somehow didn't get to break even, came closer to our break even spot, and then started making higher highs to the upside. And right now, I think we are at the liquidity. But if we were going to go to the deeper side, this is the second liquidity. If we are going to the deeper side, this is the side that I'm expecting to see. I expect to see this continuation to the upside to make this, because this, for me, this is a higher low, this is a new high, this is a low, this is a new high. So if it continues making, then I know that we are going to reach this target profit around here. Now, pound continues respecting the bullish structure we've been following all along from the 8th of July. I'm not interested in chasing new buys after this move. My focus is protecting the position that's already working, which is this one that is already working. Unless price gives me a completely new setup, patience becomes more valuable than another entry all the time, because sometimes you might wait for this, and even if it is going to go to the upside, but you might stand to lose money here with unnecessary uh, trades, because you already have a working trade. Yours is just wait patiently until you reach the take profit. And let's flip over to the side of US dollar and the Canadian dollar. Yes, this is the US dollar and the Canadian dollar. Very simply put, this has been one of the best opportunities this month, given the fact that this was the NFP signal. And after we tested the liquidity, we have always been trading to the downside. This is when the PPI came in. We were already here from 2 weeks ago, and we are still here even when the PPI came out here, and even Fed Wash had a testimony. We were still inside this signal, and even right now we closed lower than most traders would have liked to get into this. So what I expect next week is just another continuation. If we do have a pullback, this might be the liquidity to look for 1.4081. This would be a great place to look for selling opportunities to the downside to reach out to this place of 1.3923. This is the this is the target, the take profit. This is our target price. So with that being said, there's nothing else to add on this current signal. So with that being said, the overall trend still favors the dollar weakness because the movement is sharply bearish. Canada has remained relatively stable while the dollar continues losing some of its fundamental support. As long as nothing changes dramatically, fundamentally, or even technically, I still prefer selling rallies instead of buying this pair. Last but not least, gold. So with gold, I would like to start from the beginning of the month so that you can sort of have the idea and understand where I'm coming from with the bullish bias this month up until the end of this month. Now, traders, with all that being said, this was my non-farm payroll signal to the upside. We had break-evens here, even here. This was strong because the NFP came down weaker, but it was not strong enough to move the market as other currencies have expected or have moved the market. So with all that being said, we've had break-evens, a lot of break-evens coming in from gold, a lot of break-even coming in from gold. So with that being said, the market has been persistent on the downside with without forgetting the position on the dollar. And remember, even the FOMC was bearish, but the bullish momentum that comes in was not enough to overthrow gold's bearish momentum. So with all that being said, even the CPI signal, this was the CPI signal to the upside. Nothing really happened. This was the PPI signal to the upside. Nothing really happened. It still went to the downside. Now, why am I still bullish on gold? This is the signal that I do have on gold right now. And with the signal that I do have from gold, this was the entry, and this was the stop loss, because now I moved my stop loss to entry to make sure that I protect against this stubbornness of gold to go to the downside. The overall direction, everything else is still bullish to the upside. What I think particularly here is that gold is taking out liquidity right here before it moves, as it always moves later than all the currencies. Now, with all that being said, let's just recap what is happening here. Gold is probably the most frustrating for many traders right now. The dollar has weakened, inflation has cooled, PPI cooled, and yet still gold hasn't delivered the explosive rally that many traders expected. But why is it so? Because gold isn't driven by the dollar alone. It is also susceptible to reacting to treasury yields, institutional positioning, central bank expectation, risk sentiment, and profit taking. That's why currencies have outperformed gold over the past week. And I still believe that the broader idea remains constructive, but gold often moves later than the currencies. So, with all that being said, what I mean is profit taking. If this level right here is the profit taking zone. Then starting from next week, we might see gold move slightly to the higher highs, breaking this high, and breaking potentially this high to make a new high to take out our target price right here. But up until then, until that happens, we still have to be cautious with gold and keep in mind that it is a very risky asset as it moves slow and it moves later than the currencies. And with all that being said, let's go and check what is going to happen going into next week. I think the market, we have the Canadian dollar CPI, which might definitely benefit the Canadian dollar to the downside if we get a surprise better than expected, of course. And let's check this one out, of course. And we have the UK. This is a big week for the pound, of course. We have the UK uh, unemployment and employment change. We have the inflation coming out. So this is going to be a big week coming next week the for the pound. So also we do have the interest rate decision coming out of the euro. This might also end the retail sales. This might also be uh good for the euro, and the Canadian dollar might also move next week because of the retail sales expectations. Of course, as you can see, the consensus they are already bullish for the Canadian dollar. And on Friday, of course, on Friday we do have the retail sales for the pound. So that's why I'm saying this is gonna be a big week for the pound. It might set that the pound might continue higher, or it might just be a profit taking week, and then that confirms the bearishness coming out of the pound. So with all that said, traders, I want to tell you the reason why I am not trading. This is probably the biggest lesson from today's video. Professional trading doesn't include every day being active, every day trading, Friday, Monday up until Friday, every day of the year. That's not how it works. It is about being selective. If my current positions are already working, there's absolutely no reason to increase my risk unnecessarily. No. Sometimes the best trade is the one that you already have taken weeks ago, as we have seen with pound dollar, as we have seen with US dollar and the Canadian dollar, as we have seen with this signal. Sometimes your best signals are the ones that you already have taken. You don't necessarily need to move. And I'm happy again, traders, to wait until one of the two things happen. Either my trades continue reaching their targets, or price come back to break even, or creates fresh opportunity. Anything in between is simply just the market noise. I will not be interested to that. So if you want to see exactly how I planned these trades before the NFP, before CPI, before PPI, and how I manage positions after they are in profit, join the VIP group for just $30 per month. Inside the VIP group, you will receive you already know what you receive. You receive exact entries, exact stop loss and take profit target, break even management, live trade and live market updates, and even daily Forex analysis. That includes Forex analysis. That Forex analysis only not only includes a video on YouTube, it includes a private session for the London session and the New York session. You'll find the free Telegram link in the description below. If this analysis help you understand why patience is one of the biggest advantage in trading, hit the like button, subscribe, and turn on the notification. I'll see you in the next video of YouTube.